Right, thank you all for coming. It's really great to see you. Julian, you've come a fairly long way. Lovely to see you. Right, so everybody here wants to hear about some of what you've been doing this year, but also what you plan to do, and they hang on your words, your words of wisdom. So the first thing I wanted to ask you was really just how things have been going this year, and whether there are any highlights that you want to share. I think I'd like to start at the end of the line. So Shailendra, any big highlights from the year?
Highlights for 2023?
Yes.
Well, for us, the big highlight is that we went from being called Sequoia India and Southeast Asia to becoming Peak 15.
Yep.
So we've rebranded, become independent, and I think that's a pretty big highlight, at least in our lives, and pretty excited about that.
Brilliant. Okay, so I'm going to delve into that a little bit later, and
Sure.
we'll get some background on sort of the landscape around which that happened.
Sure.
Melissa, what about you? Any highlights?
I think the highlight for us in 2023 is raising a new fund and having dry powder for the future. I think anybody who's been out fundraising realizes that's quite an accomplishment in this market and macro environment.
Absolutely, and we can talk a little bit more about that environment in just a sec. Kunal?
India is on fire, and being a fintech founder in India means you're basically mostly catching up to all the innovation that is happening by the regulator, and we couldn't have been more lucky in being what we're doing. So going all guns blazing, and fortunately have the dry powder to support that.
Fantastic. So this dry powder thing is coming up quite a bit over the FinTech Festival. We've been hearing this a lot. Julian, how about you?
Well, if you don't further specify that question, I would definitely say it's the birth of my second daughter.
Oh, congratulations.
And every day I just realize how being a father just makes me a better leader.
That's lovely, actually. We don't often talk about the influence of family and it just being one holistic ecosystem as a person, so thank you for sharing that. So I'm going to go back down the line. Now that you've all told us what the highlights are, I wonder, Julian, if you had to do a rerun of the last, 11 months, is there anything that you would have done differently?
You know, for me, managing a company is about managing the energy, and you want to always have a energy spiral that goes upwards, right? You want to walk into the office and you want to have optimism, you want to have power, you want to have enthusiasm. And I think the riskiest part is once this energy spiral starts going downwards, it's hard to stop it. And I think when I look at the last 15 months, I probably didn't always do the best job at protecting the organization from negative influences from the outside. I think there was unnecessary pessimism in the company that I wasn't able to always turn around. And looking back, I think I should have protected the company more from investors. I mean, these investors, you know, they have a whole day full of terrible news, you know, and then they meet you, and then obviously they're going to be in a bad mood, right? And you have to make sure that you keep the company protected from that. I could have done better. Okay.
All right. I think it would take another panel for us to discuss the how, but thank you for being so honest as to share that, because that is, you know, that is something we don't often talk about. Kunal, if there was a rerun, what would you do differently?
I think a lot of times we as founders kind of react to what our investors are saying to us. I think but
I see a trend here.
Yes,
yeah.
exactly.
But I think the pattern is very different. A lot of them are exposed to many more global macro trends, and they may not necessarily understand what's happening in your market. It's often like parents who feel cold put a sweater on the kids, not realizing the kids feeling cold or not. So I think the change, I would say, that I've probably done a better job of educating what India is all about, and this may be the market to actually take the contrarian approach to go more aggressive, because the world seems to be in complete chaos and India is firing.
Right, right. Again, that's something I'm going to ask you about down the line, because India has seen this incredible trajectory this year. Melissa, yes, there is a theme developing here. I mean, would your rerun be more feedback? I don't know.
Well, I'm not going to blame founders, so I think I try not to look backwards, actually, and say what I wish I could have done differently. I think it's taking the learnings every year in different environments. We live in such a dynamic world that's so chaotic and complicated, but taking those learnings and looking forward and saying, what am I going to do in 2024 and just try to evaluate. I think the key theme is in 2023 is adaptability, and in 2024 it's going to be even more important. So I try not to look backwards and be too critical of what was done. We do things because we need to do them at the current point in time, but take those learnings forward for 2024. Okay,
nice one. Shailendra, what about you?
Yeah, in my case, look, whenever we've been through several cycles, I think it's very clear. Ideally, in bull markets, investors should take a vacation, and in bear markets, they should be super busy investing. And it's easy to say that. It's hard to know when to do it and to be able to do it. I mean, if I could rewind the clock, I would want to. We've been pretty active investing this year, but I would want to lean in even harder. I think these current vintages of investment, 2023, 2024, when we look back 7, 8 years, when we are in 2030 and look back to these years, people will be like, hey, we should have leaned in harder. Especially because we are focused on India, Southeast Asia primarily, and both of these regions have such an incredible decade ahead or 2 decades ahead that I'm quite sure we'll look back and say, look, that cycle when stuff corrected and fintechs were trading relatively cheaply and SaaS was trading at 7, 8 times ARR, we should have leaned in even harder. I'm quite sure we'll look back with the benefit of hindsight many years later and probably come to that conclusion. But again, I think knowing that intellectually and then executing it on the ground are 2 different things. So we've been trying very hard to look actively to find more founders and companies to back, but I wish we would even more lean into the current market.
Well, I guess you do what you do with the information you have at hand at the time. Talking of leaning in, right? Let's lean into this India story. And I know Kunal has a lot to say about this. So to everybody who was outside India this year, it was incredible in terms of all the stats, the growth, going to the moon, for goodness sake, and doing it in the most efficient way. It's like a narrative that is indicative of India's ambitions. And I feel from the conversations that we've had, you really leaned into that, sort of in your headspace at least.
I think India is going through a very specific attitude change for the whole country. The recent Cricket World Cup is a good example. We've not lost a match, and it's never happened. I've grown up seeing cricket. But I think the nuance on the digital infrastructure that has happened, so the digital public infrastructure, which a lot of technocrats of India participated as volunteers and built, Nandan Nilekani being one of them. We've got UPI, we've got account aggregator, ONDC, just like almost as a founder, I almost feel that we're catching up on all these stacks that are just coming in and thinking about how the second order effects of this are going to play out. And because of the solid set of capital coming in, all these infrastructures coming in, government supporting startups, regulators supporting startups, we are just seeing evolution of companies to just be rapid and consumers. Like, for example, but interesting stat is like 50% of India's population is probably under age 25. So basically every household in India has a chief technology officer between the age of 12 to 20 and just really accelerating the household to kind of get to tech. For example, our vaccination program was a good story of how it was done seamlessly only on app, and the whole country actually got vaccinated through that. So I think what we are noticing is that while the per capita income is kind of following its path and trajectory, the technology adoption and with 5G, cheaper handsets, smartphone penetration, like UPI is now close to 400 million customers transacting every month. Like that's just massive. And it's like 7, 8 years from now that has kind of been there. Also what we are seeing is the second order thing. For example, the regulator allowed digital lending guidelines and allowed fintechs to participate very clearly with banks. In many markets, I've noticed that the role of bank and fintech is sort of unclear. But in India, it's very clear where do you start the line, where does it end, and what is the role that everybody brings. And regulators actually leverage fintechs to get technology adoption while keeping the line of what is regulated and not regulated. So I think, I mean, just to give you an example, I've been in fintech now for over 14 years now, maybe 15, and I've had more meetings with the regulator in the last 12 months than I've had all the years combined. And they are inviting us, they are doing hackathons, they are doing demo days, and I'm in a world where you're literally given out stuff to just build Lego blocks on. And as a founder, I couldn't be more lucky to be building in India.
That's great stuff. And actually, you know, I've been involved with the FinTech Festival here in Singapore for some time now, and I do notice that there is a lot of back and forth sort of feedback between Singapore and India in terms of sharing the technology, the ideas, the concepts. Are you feeling that these collaborations, whether it's with Singapore or other FinTech hubs, are quite important in the journey?
I think so. I think what is happening is I almost feel that India is building a democracy stack in some ways. We call it digital public infrastructure, but it's basically how do you run a democracy more efficiently. And I think the moment you kind of take these things and take it and open source some of these things for other countries to kind of adopt. For example, I noticed Pix, when it kind of took UPI's learnings and implemented that in Brazil, at least what the founders and VCs told me, that it took a massive impact on inflation getting controlled, because the speed of moving money moved from like 6-7 days to almost instantly. And in a country like that, when you can make an impact of that thing where money moves multiple cycles faster, you can really transform the whole country. So I think these are very big steps. For example, in India, GST, which is the tax we collect, every month it's beating the record. And the large chunk is, one is economic growth, but more also the informal thing is coming to think, because cash is just disappearing. So many countries who've had similar problems will kind of accelerate to that. And also, while like remove the monopoly of a few players who kind of participate in the ecosystem with UPI, ONDC, literally everybody is playing the game and in a very competitive landscape on a playground or a stage that is set up by the government or the regulators. So I think when many countries are, for example, in the India, we had our own FinTech festival in Bombay, and we had close to 100 different countries, regulators visiting and doing closed-door sessions with our regulator to learn and doing workshops with them. So I think it's going to spread very quickly because the data is out there now.
Right. So it's very much on a high, right? That's what we're hearing. Julian, let's talk about Europe. So Marie McGuinness from the European Commission has been here at the FinTech Festival, has been a friend of the festival. But there, you know, we know that whether you're talking about Europe as an economy, you're talking about the UK, the US, the narrative is all around inflation. It's around transition. It's around just destabilization in terms of, you know, our thinking and having to adjust to climate change and all of these sorts of things. And you see there's a difference between what I hear in this part of the world and what I hear over there. How has that been influencing, and how will that influence some of the decisions you have to make?
Yeah, I think it's a wrong narrative. Europe is very strong, very, very strong. We're seeing Europe and Germany especially recovering very, very fast. So yes, Ukraine has hit us. We were heavily dependent on cheap energy, but just look at the turnaround time of how we've managed to overcome this issue. Look at the development of inflation. So Europe, especially Germany, Germany is not the sick man of Europe, it's the powerhouse of Europe, and the potential we have in Europe is immense. I see that a few topics around regulation are actually USPs for Europe in a global competitive perspective. Many founders actually criticize the regulation around data. I think actually it's a real value that we have. In Germany, for example, I don't know if you know, it's the lowest amount of card payments, so the highest amount of cash payments in the world. The reason is we know how it feels like because the last 2-3 generations have experienced it firsthand. What happens if the secret police knows things about you, uses them against you, puts you in prison? So this is very deeply ingrained in the DNA, and I think in today's age, where we are talking about dangers around AI and data protection, I think this can really become a USP, and I would much rather have European values in technology than other values, and I think we need a little bit more self-confidence in Europe to capitalize on our strengths.
Okay, so you're saying that you appreciate the regulation because of the trust issues that might exist in terms of the heritage. Sure. Is that right? Am I understanding that properly?
I think we need more self-confidence in Europe to build on our strengths, and I think we have huge strengths for the next 20 years to build more responsible technology.
Now, what's evident is Julian is very confident. Okay, so you're a great example. And what is it, $4.5 billion valuation now for wefox? You've had a big year. A new CFO, if I understand it correctly. What's the plan? There are lots of headlines around global expansion.
Yeah, I mean, the focus has definitely been financial discipline. So we're going to be $1 billion in revenues. We're going to be all in profitable. We've been turning around. I mean, this is not easy. And for me as a CEO, was definitely a challenge to go from hyper growth, 100% growth every year and burning cash to turning the ship around within a few months and making it profitable. It hasn't been easy, but it's been a great experience. I think the pendulum has gone a little bit too far in one direction. To the points I initially mentioned, my focus really is to make sure that the company really reignites and understands our potential, right? And I think the potential of wefox is just tremendous. We're just at the very beginning. Next year, we're going to launch our internal technology that we've built our insurer and our distribution on. We're going to launch that as a SaaS platform to other insurers. So we have more than 300 insurers that we work with today, and we're going to start offering them our technology to connect to our distribution in a much easier and faster way, but also to their distribution. So we're turning wefox from an insurance distribution and full stack insurer into a tech business and into a real tech business, which I'm incredibly excited about. Yeah, I think the future is bright.
Yeah, well, I'm certainly feeling that. Melissa, let me take it to you because I'm really interested in what Julian is saying here, and I want to take it forwards because you talk to a lot of companies, and one of the things that is merging is like the emphasis on the building block companies that support fintech infrastructure, whatever it might be. What are some of the big trends that you're seeing that we need to keep an eye out for? What are you interested in, particularly when it comes to SaaS platforms, that kind of thing?
Well, we've always been B2B only at Arbor. So we've been very focused on payment infrastructure throughout the world. We invest not only in Asia, but the Middle East and a little bit in the US. So it depends on the specific aspects, but I think the areas we're most interested in at the moment is really the intersection of payments and insurance. And I think that, you know, if you look at the US market as an example, we've invested in a company that's basically doing end-to-end for self-insured companies, adjudicating the claim and facilitating payment very easily. So it's this intersection of sort of healthcare, insurance, and payments. And then I think, you know, around the world, I spent quite a bit of time actually living in Bermuda during COVID, learning about reinsurance, and I think it's an industry that needs to be completely rebuilt compared to how it's done today. So when we think about sort of the next couple of years, I think payment infrastructure is going to change dramatically. I mean, real-time payments, and then there'll be a host of issues around that, you know, we love chaos and transformation because then there's opportunities for investment. I think that's one area, and then the other area, as I said, is this intersection of insurance and payments is really where we're focused today. But we've always been focused on building blocks and never on consumer, because we just, that's not what we do. Our DNA has really been hardcore infrastructure for financial services.
What do you foresee, perhaps, as some of the challenges for some of the companies that you're working with? Because, you know, we keep talking about how we're living in this disrupted world, and it doesn't matter whether you're talking about AI or you're talking about climate change. What are the worries that they come to you with, and then how are you helping them navigate?
Well, I think 2024 is going to be a very brutal year. I mean, I think, unfortunately for many VCs, they've never really lived in a down market. I mean, 2008 and 2009 was nothing compared to, we were joking earlier about the nuclear winter of 2001, where the spigot really just turned off. I mean, we've been very focused, sent a letter out to the CEOs, been working really hard through 23 to build sustainable companies, cut burn rates. And I think what people, you know, cannot underestimate, yes, there's great pockets, you know, India, the Middle East, Saudi Arabia, but we live in a difficult and challenging world where I think having a prepared mind and being prepared for, you know, what could be a difficult first half of 24 is always better. We always say to our entrepreneurs that we back, we're your partner. Once we're an investor, we're your partner. We're in this together. We succeed or fail together, and that means really tightening up product market fit, spending, and focus of these companies as we go through the next year.
Great
That's
stuff.
how I spend a lot of my time.
Really? Okay. You probably spend a lot of your time, Shailendra, having these sorts of conversations as well. Earlier, you mentioned the fact that you've had a big shift change.
Yes.
In terms of name and labeling and signaling. Peak 15. What's the story behind the name?
Well, Peak 15 was the original name given to Mount Everest. Before it was called Mount Everest, it was called Peak 15 before that. Little anecdote related to that is when it was called Peak 15, they did not know it was the world's tallest mountain at the time. But for us, really the name signifies, the founder's journey and this desire to, get to the top of the highest mountain, and knowing full well it's going to be pretty challenging, grueling, needs a lot of prep, needs resilience, grit, and staying super committed. It would be easy to give up on the way to Peak 15. So, that's why we named ourselves Peak 15.
So let me take that a little bit further. I'm going to go to the Slido because I want to there's a question that's come in. So you talked about prep to climb the mountain. So how do you prep when you're taking into consideration the interest rate climate, the global focus on ESG? What would your 5-year investment theme be, given these sorts of scenarios that we're talking about? Similar question I asked Melissa, but this is one that's come in from the audience.
Yeah, I think we all massively underestimate the power of compounding over time. It's very normal for us to assume linear curves everywhere we look. That's how the human mind is trained. That's how all our education is trained. We all think logically and in straight lines. I think what really happens is you take 5, 10, 20-year view on countries like India or Southeast Asia, there's going to be such an extraordinary amount of compounding ahead that, I think we will all likely to overestimate our challenges in the near term. We are likely to also, fast-growing companies will overestimate their progress in the near term. We'll all underestimate what happens in 10 or 20 years. So at least what we really try to do is, we are very fixated on this idea, can we help build companies that will outlive us? As investors, as founders, can we really help build those, and it might be a few dozen companies that we're able to help build over many decades, but that will become foundational for our economy. So I think at least what we are super focused on is this idea that you help founders think, act, build these multi-generational companies. And what that means and what that translates is, honestly, we are not so stressed about a bull market, a bear market, and so on. You just got to be very consistent. I think such times are terrific because it raises the bar on how you're going to build a business. You have to be more efficient, like Melissa said, but also what it does is it sharpens the focus on doing a few things extraordinarily well. In times when capital is abundant, everybody is very likely to pursue more optionality because the cost of pursuing incremental optionality is low, and at such times, the cost of pursuing incremental optionality in a business is high. So founders tend to build very sharply focused companies with extraordinary value proposition, more efficiency, and I think they've built a stronger core at such times. So I think this next few year vintage is a chance for founders to really dig in my opinion. And I think what we'll then see is what will then surprise everybody is people will look back from a few years later and say, wow, all this incredible work was happening. How come at the time it wasn't so apparent to us? So actually, I see a little bit of that, with the benefit of seeing a few cycles now. But, I think, just if you think in a few decade terms, if you think the, consumer internet wave, we're 25, 30 years in at this point, right? Started in the mid-1990s. You think of the cloud wave, we're probably 2 decades in almost, or approaching, and it's still going strong. If you think of AI, we're just starting. Maybe we are a few years in already at this point. We're probably a couple more decades to go before it'll play out. So I think we are so early in this new trend line, and I think there is still so much opportunity everywhere in the world, especially in fintech. Fintech has been our top sector of investment for 4 consecutive fund cycles. And like I said, I'm quite confident when we look back at the future and look at today, we'll want to have leaned in even harder. So it's a little bit of those times where if you focus too much on the present, you're likely to come to different conclusions. But I think if you can stay very committed to a multi-decade mindset, I think it's a pretty incredible time.
Thanks for that. So I want to pick up on that, actually, the multi-decade mindset. and take it to you, Julian. Can you? I mean, you're sort of in the throes of things every single day, making decisions constantly on the hoof, and it is influencing what's coming next. Is it possible for you to have a multi-decade mindset? Can you?
Of course. I mean, that's my only role.
Okay.
So
It's challenging, though.
sure, but I mean, for me, the way I look at it is I'm the coach, and if I need to put myself on the field in the 90th minute to shoot the winning goal every time, I'm a really bad coach. So whenever I see that I actually am the only one that can do something, I look at how I can strengthen my team. And that allows me to step out, even if the house is on fire. I'm not the one putting out the fire, So I need that freedom in order to see where the world is going and what's our core business. And I think we have a strong core business. We have a strong, profitable core business. Is going to be a minor part of our business in 10 years from now. Our company is going to be a completely different company. We need to disrupt ourselves. We need to even think about cannibalizing our own current business in order to become long-term sustainable. So it's all about how can we become a generational company, and we're not going to be a generational company with focusing on what we generate cash with today.
But let me very quickly take what Melissa was saying and also what Shailendra was saying, put it together and put it to you, which is 2024 is going to be a bit challenging. I'm picking that up. And Shailendra saying the whole point is you've got to have the prep, right, to be able to handle the climb. So what prep are you doing for 2024?
So we're going to continue the financial discipline. We're going to pair it with our ambitious mindset. And we're not going to let ourselves be talked down by people that see problems left and right. We're going to focus on ourselves. And it's really around that message to my team, right? I have an extremely strong team. 24 isn't so much my job, as I said before. 24 is my team's job. My job is 26, 28, 30. But what I need to make sure is constantly keep my team connected to where we want to go and don't lose that out of sight.
Yeah. I don't know. I wonder whether it's slightly different with you, Kunal, because something that you have mentioned to me has been this idea of being hyper efficient. How are you managing to be hyper efficient? That takes a lot of energy. It takes information, intelligence. What tools are you applying to make this happen for yourself?
I think it's first of all a mindset. We should never forget the largest employer in the world is inefficiency. And there is inefficiency everywhere if you think about it and look for it. And few things that we've done, for example, our first slide on our investor deck, monthly updates is revenue per employee, right? And if you obsess about that, and that's when you can truly call yourself a tech company or an efficient company, right? And you will see that eventually all the companies that continue to compound multi-decades are optimizing this metric subconsciously, right? Or profit per employee. And I think the moment you think about that, you start thinking about tools, you start thinking about AI in a very different way. And we can keep wishing for these things to not happen so fast, but they will happen very fast. And we are going through these changes now. Earlier it should be once a decade change, now it's happening once a year or once in 6 months kind of change that is going to happen. So I think as a founder, your key thing is to look for, be at the right places to operate and have the least amount of drag, inefficiency to kind of operate with. Only then you can kind of do more things, because we are living in a world where we should not be surprised where good founders will be running multiple companies together, right? And if you are not hyper efficient about how you do things, you will lose all these opportunities. And I think as the world goes through chaos, there is going to be more concentration of trust on a few operators who can do it. And we should not forget that, like, think about Zuckerberg. The guy is so young, and he can probably build 4 other things. And very soon you will see that hyper-efficient teams will be able to kind of do so many more things, because tech is just enabling the whole world on all businesses to become like APIs in some ways. And we could be participating in many ecosystems.
Okay, I've just looked at the time. It's absolutely roaring by. So I'm going to take some more of the audience questions because, you know, you've been a great audience and I want to make sure they're onto the panel. I want to put this one to you, Melissa. So, how does the evolving geopolitical situation globally in the last 1 to 2 years affect your investment decisions in the short and long term? Does it at all? Or is it sort of running in parallel? Because a lot of the companies that you're working with are building out on future technology and new opportunities of things we've never seen before.
Well, I think historically, geopolitics never came into play in venture. I think you would agree that that has really changed, right? I think we all have to be aware, especially given the letters that the U.S. government sent out, you know, over the last year about investments in China. But that could be just the beginning. So for the first time, I think, and we all have to have awareness of the geopolitical landscape. Personally, I think the transformation we're going through in the world is actually a great thing as an investor because you're seeing lots of opportunities in different places that maybe you wouldn't have seen before. I think U.S. companies will stay in the U.S., and I think we'll see homegrown, you know, solutions for China, for the Middle East, for Southeast Asia, for India. And so as an investor, it's not so much that I worry about it. I think it's more that this creates enormous opportunity. And actually, I think it's going to really benefit local venture markets, right? I mean, historically, we've seen a lot of concentration of venture dollars in the US and China. You know, now India is coming up in other parts of the world, but I think that's only going to increase. And so it democratizes innovation. It democratizes the venture industry. It makes it actually far more global. In some ways, the deglobalization or the geopolitical environment we're seeing is actually really creating, you know, for the first time ever, solid, localized venture ecosystems that are going to be self-sustaining without Silicon Valley.
Yeah, definitely seeing that trend. Okay, we're almost out of time, but there's one question that is coming up again and again, and it's AI. So I thought if we could just quickly go down the line and just get your reflections on AI and how the extent to which it's impacting your investment thesis. Can we start with you, Shailendra?
Yeah, first look, AI is not new. We've been investing in AI for 7 or 8 years. And I do think there is a why now moment in AI where, you know, large language models have reached a level of efficacy and the, you know, time it takes and the cost it takes to leverage AI has shifted in a manner where I think your AI now likely becomes quite ubiquitous going forward and embedded in all kinds of software. So I think AI is you know, you could say that it is going to be, you know, pretty important, in our opinion, pretty driving force behind everything tech, you know, going forward. And there will be no non-AI way of doing things. Like everybody who can use AI will try to use AI. So yeah, but it's very early. I think we are, you know, it's moving super fast. In my time as an investor, I've never seen any other technology trend with this rapid a speed of iterations as we are seeing in AI currently. And but it will be a very long journey before enterprises, large companies, tech companies, everybody leverages AI fully. So it's pretty exciting.
Yeah, exciting. Just the beginning. Melissa?
I think we're at the beginning of the use of large language models, and I think it's because, you know, it's part of everything in every company that we will look at. And if someone's not using it, that would be kind of worrisome. But it's part of everything.
Yeah. Okay. Kunal?
I mean, I'll quote Sam, but I asked him the same question about what do you think about humans now with AI. And he interestingly quoted that he used to always feel that intelligence was a property that we exclusively attributed to humans, and it seems like it's just a property of matter. So you're looking at exponential disruption, and I think just like people don't understand compounding, people don't understand what is exponential, and I think we'll see very different things every few months, and I think our ability to just understand, I think we are all numbing down to what it can do. But I think it's pretty disruptive.
Yeah, we have to keep evolving and learning as it evolves as well. Julian, you get the last word.
Well, I think still people underestimate the impact. It's going to be faster and bigger. I think AI agents start replacing people in operations, people in customer service, people in claims, and it just makes a lot of sense, right? To spend maybe $300 a month for an AI agent instead of $3,000 a month for a human agent. And this will go very, very fast and will have huge implications on society that I don't have all answers for, unfortunately, but I don't think it's stoppable.
Well, hopefully we can help all those disgruntled people who, will feel that impact of the AI on the other side, and that takes for us to just evolve in ourselves, doesn't it? Well, we have to wrap it up there. Thank you all so, so much. Please show your appreciation for our panel.